Good afternoon. You're watching Business World Live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. Okay, not a good end to the week here for the main index. Three straight days of declines here for the PSCI, down over a quarter of 8% to 7,280. This as foreign investors let go of local stocks once again. That's valued at $36.15 million. This is the main index, the benchmark's first weekly loss in 3 weeks, with shares shedding 1.4% over a 5-day period. Earlier in the program, we had Ed Francisco, BDO Capital Investment Corporation. He says investors at this stage are really just taking profits, even as third quarter earnings and GDP numbers were good for the third quarter, but we might see some window dressing by the tail end of the year. Is saying that sentiment is still on a high. In fact, he's seeing a good end to the year here for the main index at 7,400 to 7,500. The only downside risk here, according to him, the mudslinging in the political scene, which might scare investors. But one other big name with high hopes for the economy is Ayala President and CEO Fernando Zobel. He tells Bloomberg TV that the worst is over for the Philippine economy as looser restrictions and high remittances overseas boost consumption. He's saying that Ayala is going to focus on fewer units here, specifically growing rapidly their core banking, their telco, their property, and renewable energy units. According to him, they will redeploy by buying back undervalued shares, cutting debt, and growing new initiatives. And looking at our leaders and laggards today here, a number of Ayala stocks here gaining, in fact, leading the charge here. Globe up 5.5%. You also have Ayala Land here ending the day in the green, edging higher by 1.8%. BPI likewise also increasing 1.3%. Not the same story though for AC Energy, which ended the day in the negative here, down 1.8%. Here are other headlines we're keeping our eyes on. The tourism department says the country would soon welcome international tourists for leisure travel. This follows the agency's announcement that the IATF has, quote, approved in principle the entry of fully vaccinated tourists from green list countries. Secretary Berna Romulo Puyat says a technical working group on travel has been tasked to craft the guidelines for the entry of foreign tourists. These guidelines would then be finalized and approved by the IATF. The agency added that the country will only allow entry of individuals who received vaccines that are recognized by the FDA or those authorized by the WHO. The Trade Department is eyeing to put up a one-stop shop that will make business registration easier for startups. Trade Secretary Mon Lopez says end-to-end registration of startups can be facilitated through the so-called SBOS, or the Startup Business One-Stop Shop. Lopez says the platform would contain all information on the legal and regulatory processes involved, from opening, operating, to closing or exiting a startup, in line with the Ease of Doing Business Act. Meanwhile, the DTI launched today another program supporting startups, that is the Startup Venture Fund, or SVF. DTI's investment arm has allotted 250 million pesos for the SVF this year, as it aims to provide benefits and other forms of support to the startup ecosystem. Now, Collier says the property market demand is likely to rise next year. The company says it's seeing green shoots of recovery in the property market, and that demand is likely to start recovering in 2022, especially for the office, residential, and retail segments. Demand for more office space is expected next year as the government ramps up its vaccination efforts and eases restrictions, allowing more workers to physically report to offices. Collier says the recovery of major economies such as the US could also contribute to more demand from outsourcing firms. Demand for residential spaces may also increase next year for the same reasons, on top of the continuous growth of cash remittances from OFWs. In what has been an unexpected move, the BSP, backdropped by a scenic Boracay, decided to stay pat, keeping rates steady in a bid to help the economy's recovery. But for how long can they hold? Let's discuss that and more with Union Bank's chief economist, Carlo Asuncion. Good afternoon, Mr. Carlo.
Good afternoon, Jess. Thanks for having me.
Thank you for joining us again. Yesterday, that was a pretty much expected move here from the BSP, considering, of course, that inflation has eased over the past months. But should growth persist in the succeeding quarters, can the BSP finally take action and reverse current stance?
Yeah, well, we're taking the cue from BSP, saying that if growth is entrenched, that's the key word. When the recovery is entrenched, then that's when they think they're going to move, And I would expect that if first quarter and second quarter 2022 are going to be positive, then we might be seeing probably a 25 basis points uptick and another one probably in the last quarter. So total about 50 basis points for next year. But
Okay,
towards the end of
mhm.
the year.
When do you see again the first cut happening at least?
Well, that depends, of course, on how first Q and second Q performs. No, so probably in third Q or three Q, you're gonna see some uptick already at that
Mhm.
0.25.
Okay, but also that hinges on the assumption that growth is going to persist. Are we really gaining solid traction on that front? And what happens next year when base effects have already faded?
Yeah, I think that's been a huge question, even in our own circles, with mobility rising and people are spending, people are out. So the question is whether is this just from pent up demand or what you call revenge spending, and how long will it last? No? Whether or not people basically from the middle class towards the upper class, are the ones that are actually spending, but the rest are not. So what that's also a huge question that we would like to see, moving forward as we see more reopening, and because it leaves a question of whether how much scarring has happened. Certain industries have been affected, and how much um, uh, employment actually has been affected, and certainly if employment is affected, the purchasing power, of course, is also hampered. So pretty much what has been driving all of this has been people just coming out in droves, and more likely just pent up demand.
Mhm. Now, given that as well, there are some corners already calling for the full reopening of the economy. How necessary is this move now?
Yeah, that's also a huge question. How much opening? No, we've seen in other countries, no, especially in Europe, where they even in the U.S. have totally opened everything, no, and we've seen some flashes, no, of resurgence, and I think that even Germany has now restricted a lot on the unvaccinated, and but of course, well, personally, I don't think there's going to be a lockdown 2020
Mhm.
anymore, because it's not very feasible, not very. It's not going to be. It's not needed at this point, because it's very difficult for certain companies, to commit, to employment, to commit to production, if these uncertainties remain, no? And
Mhm.
government does not handle it pretty well, moving forward.
Now, you mentioned earlier we have yet to fully gauge as to how deep the economic scarring really is due to the pandemic. But optimism is quite high. A number of government agencies, our economic managers, already predicting pre-pandemic growth levels as early as the first quarters next year. The BSP saying that could happen latter part of 2022. When do you see that happening?
Yeah, well, we sort of agree with that. We agree with that. the uptick and the increases and the positivity, but I've been actually been pointing it out how um, it's very hard to gauge because that the virus is hard to it has its own timeline, even if we've seen that in other cases, no, other countries, no, even high levels of vaccinations, no. We've seen. I just don't know how an emerging market or a developing country would be able to handle that moving forward. If another resurgence happens, no, and I am anticipating, with the increase of movement, interaction among people, and now with the election, some election related activities with people gathering, and even seeing YouTube, really people going back to basketball, those,
Mhm.
those simple activities of congregation of people are very still, very at this point, I would say dangerous. Is how we've seen this virus works, no, and how it, you know, modus operandi niya, no, but yeah, it's very. I think the downside. That's the huge downside at this point. Yes, we can call it out, but we cannot predict the virus and how
Mhm.
it's going to move in the next 6 months.
Okay. Now, one other thing, of course, that we're keeping an eye on, especially when talking about growth, inflation. What's your inflation forecast as we close out the year? We have elevated prices, price pressures, rather, really faded.
Yeah, well, we think that it's going to stay elevated, and in terms of year-on-year numbers, we're looking at 4.3, still above the government's target, but actually it's the same as the government's target at
Mhm.
this point, and that's what our models are saying to us. No? So, but I think one important thing to point out is that with even the government saying that pork, like for example, it's rising again, but it's not rising the way that's been rising in the previous year. No?
Mhm.
But still, I think there are consequences for firms. Where well, it's easy to pass on the burden, but there are, I think, at this point, when people are, you know um, you know there's lack of jobs and lack of the purchasing power is low, so you wouldn't want to lose customers and just try to absorb all of these costs at this point, but for how long,
Mhm.
and even when looking at how oil prices are moving, but there are easing that has been happening lately, even in this forum of Bloomberg saying that, some of the supply chain bottlenecks, particularly semiconductors, is easing. And, those are good things to know at this point, but we still think that it's going to be elevated, at least on the local front. No?
Up to when again is it going to remain elevated until next year?
Yeah, well,
For
next year it's going to be we're expecting a 2.8. So there's
okay,
going to be a cliff, as they say.
all right.
But we don't know until when is it, but it's going to happen soon. In fact, we're expecting it next month. No,
Mhm.
we'll see how it looks like because our expectation next month is below the target already
Mhm.
of
Now, another thing that you mentioned earlier, election activity, that in a way is at least expected to help bolster growth, especially in 2022. But all this political bickering, how's that going to affect growth, especially investor sentiment?
I'm not so concerned about the bickering because if you're an investor and you're used to the Philippine politics here, sometimes you just blow it
Mhm.
over. But if you're new, that's something else, right?
Mhm.
So, but I think my concern so much more is um, who's going to win?
Okay.
Are we going to have a minority president like a la FVR back in the day? So, are we going to even get a new president? So, once because you know how credibility and credence is
Mhm.
very important, especially if you just want a portion of the votes, and hopefully we can have a smooth transition of power eventually.
Mhm. Okay, now lastly, before we let you go again, what's your forecast for the last quarter of the year and full year?
Yeah, well, we're looking at 5.5. We haven't really changed our forecast, but
Mhm.
we're really we're also expecting, probably we'll revise it. No, but I think that there's going to be an uptrend, upward pressure to that. So, but we're looking at a 5.2. That's even higher with what
Mhm.
the Ned was saying at 4.9. So, but we're at 5.2% at this point. But of course, we're going to look at our semi-real forecasting
All
tools
right,
and see
but
where it's going to
definitely,
land.
at least we're going to government is going to hit target based on your
Yep, yeah,
projections. All
we
right, thank
think
you
so.
very much for your time this afternoon.
Thank
Again,
you.
Union Bank Chief Economist Carlo Asuncion. Thank you, sir, and stay safe. And those are the biggest stories of this trading day, November 19, 2021. Catch Business World Live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on. Wash hands and stay safe. Philippines, have a great weekend.